Hi everyone, a very good afternoon. You're watching the newsroom on ET now. I'm Ubina Kapasi. We're witnessing a bit of a recovery coming in the equity markets. Yes, we saw a deep gash when we opened because the handover from the United States equity markets was very weak, especially with the rout in technology stocks. But now recovery kicking in, and I think we've recovered a good 70 points from the low point of the day. 11,437 is on the cards, and the Sensex now has managed to narrow down the losses to 315 points. So 100-point recovery for the Sensex as well. But it's autos actually that has managed to lift the index a tad bit, because the auto index has really turned into the green, and how with 0.7% of gains now. So Maruti Suzuki really packing in a punch over there, 3% higher for that stock. And let's now talk about some more movers and shakers. Another stock that's very resilient in trade is a Bharti Infratel. Remember that we had that Indus Tower deal as well that was in focus in the last one odd week. But it's interesting to see the sort of resilience in this counter, with whatever's happening in the telecom sector, and the volumes as well over here. The last time I checked, it was 11 times the 20-day average. So quite a bit of volume activity seen over there. One of the biggest F&O gainers as well. In fact, just in the last 3 days, Bharti Infratel has managed to gain almost 15%. So solid gains being witnessed over there. Page Industries, slightly in the red, almost about 1% of losses being witnessed over there. The company did feel, of course, the lockdown strain, but now it looks like they're back to normal after reporting a 66% contraction in their revenues. There was under absorption of costs, provisioning as well due to a lower revenue base. That's led to gross margins, EBITDA margins as well contracting. In fact, this is the first time that the company posted an EBITDA loss in many quarters. The company has said that business, though, has revived to pre-COVID levels in August. So that's a very interesting one. Of course, there was news with respect to, a lot of, there was certain contentions with respect to the payment of the vendors, so on and so forth. But all of that, they said that they've been paying their vendors as well in time. Page will be an important stock to keep on our radar. By the way, Goldman Sachs has a sell on this one. CreditAccess Gramin, this one is managing to stay pretty steady in trade. In fact, sitting with gains of almost about 3% in trade. CLSA has actually initiated coverage on CreditAccess Gramin with a buy and a target at 840 rupees, as this one is India's largest microfinancial institute that actually meets the needs of the rural poor. It's a customer-centric business model focused in rural areas, and it's managed to weather through this crisis a little better than peers. So they believe that the premium valuations as well are likely to sustain. And then let's take a look at another auto company, Force Motors. Doesn't have, of course, much of a weightage on the index, but big spike seen over there. Domestic sales have managed to zoom quite significantly, especially on a month-on-month basis. So the production was virtually at more or less the same-ish level, but SUV, tractors, that increased production quite significantly. Exports rose, domestic sales surged 23%, from July. So a nice recovery being witnessed, and the stock price as well has managed to rally, reflecting that. Well, moving on, revised PSL guidelines will enable better credit penetration to credit deficient areas, increase the lending to small and marginal farmers and weaker sections, boost credit to renewable energy and health infrastructure. These are some of the revised PSL guidelines being issued by the RBI. My colleague Priyanka joins in with more.
Well, yes, the RBI has revised the priority sector lending guidelines, and what the RBI is saying is this is for inclusive development, and these guidelines have been put out after a lot of consultation with all the involved stakeholders. To take a look at what all has been revised in these guidelines: bank finance to startups up to 50 crore rupees, loans to farmers for installation of solar plants, plants for solarization of grid-connected agriculture, pumps, and loans for setting up compressed biogas will be included as fresh categories which are eligible for priority sector lending. In the details, they have said that they will be addressing regional disparities in the flow of priority sector credit. Higher weightage has been given mainly to incremental priority sector credit in identified districts where the flow of priority sector lending is comparatively low as compared to other districts. They have also said that the targets prescribed for small and marginal farmers and weaker sections is being increased in a phased manner, and also higher credit limit has been specified for farmer producers organizations as well as farmer producers companies which are undertaking farming with assured marketing of their product at a predetermined price. They have also increased loan limits for renewable energy. It has almost been double is what the RBI is saying. And for the improvement of health infrastructure, credit limit for health infrastructure, those under Ayushman Bharat as well, has been doubled. So overall, the main focus here in this announcement by the RBI is to benefit credit to farmers, weaker sections of the society, boost renewable energy and health infrastructure.
All right, Priyanka, thank you so much for that. Well, addressing the 60th Siam Auto Convention, CII President Uday Kotak stressed on the needs for the government to work towards easing supply-side issues to facilitate smooth recovery for the auto sector. Meanwhile, Union Transport Minister Nitin Gadkari assured India Inc.'s leaders that the government is keen on helping the auto industry rev up their exports and ensure that there is ease of doing business in the country. In fact, he also mentioned that he would permit auto companies to open their own petrol pumps. Listen in.
Seamless approach between the center and states so that the supply chains to the auto sector continue smoothly. The key for the auto sector is that if we get demand and we boost demand on the one side, the ability to supply will be very crucial, or else we will have a supply shock while the demand may actually be there for the festival time. Therefore, we must focus on the supply shock side and no bottlenecks coming for the auto sector in the supply side. This is the time for us to invest in infrastructure. Therefore, the long-term foundation for the auto sector is better roads, more roads, and shorter distances and without any friction. Therefore, if we can invest in more roads, putting money to the work in the hands of the laborers and really focus on investing in the road infrastructure, that can also help the medium-term situation for the broader economy as well as create the jobs.
Regarding the manufacturing of automobiles, some regulations, rules, whatever, we have taken a decision, but we are very open. Anytime I will suggest you, if you have any legal, logical, ethical points where you feel that it is the time for government that we should rectify our rules and regulation, we are open and we are ready for discussion.
Well, at the same convention, Union Minister Prakash Javadekar reiterated that the government may not agree to cut GST immediately, but it's not a final no. Listen in to a slice of his speech at the event.
Our revenues have also nosedived. So your ability to help also, though you wish, limits. And you have suffered two successive problems, challenges. A, you experienced a decadal cyclical slowdown, and you have to also achieve migration to BS6. And I must congratulate the auto industry for doing this migration within 3 years and 4 years in advance. The issue is that government is open to ideas. Government is always making dialogue with you. We may not agree immediately for reduction in GST, but that is not a final no. There can be definitely a way forward, which I also see progress will be done.
Okay, well, in our What's the Story segment, we will be throwing the spotlight on specialty chemicals maker alkyl amines. And guess what? This one has rocketed 40% in the last 1 month. My colleague Varun Hirimath is joining us behind what's really fueling the rally here. Varun?
Companies need to hit a certain critical mass before we at ET Now begin to cover them seriously. And alkyl amines is one that's just flown off the charts over the last year, but it began as a very small company, so we might have missed out on the initial part of the story. But today we're trying to bring you the journey of this company to really show you what has led to a 329% return in 1 year, 115% return in 6 months, a 60% return in 3 months, and a 37% return in 1 month. So clearly, what's not to like about this stock? Now, they make amines, as you might guess by the name. So they have aliphatic amines, amine derivatives, and fine chemicals. Now, these cater predominantly to the pharma industry and the agrochemical industry, the water treatment industry, and the specialty chemical industry, all of which have been booming recently in India, both on the volume and valuation front. Custom synthesis, contract R&D, process validation, toll and contract manufacturing. So this is not a commoditized business by any means, which you can also see by the EBITDA margins at 32%. It is a very tailor-made chemical products business where customers have very specific requirements, and alkyl is able to cater to that. Revenues have grown tremendously over the last year. Margins have improved more than 1,000 basis points. So there's been a 10% margin improvement YOY. The ROCE for this one, 41%, the ROE, 42%. Saurabh Mukherjee is a prominent investor here. He always says he likes the return on capital to be significantly higher than the cost of capital. One can see why he would like alkyl amines so much, because the mismatch is huge over here. 10-year sales CAGR of 18%, 10-year stock price CAGR of 53%, 10-year ROE of 29%. So this is one to watch out for. It seems to be going higher and higher every day. It's given some tremendous returns, and definitely a top pick in the chemical space.
All right, Varun, thank you for that. Well, after Jio, now Reliance is looking at selling its stake in Reliance Retail, and it could be their old partner Silver Lake. My colleague Vinay Motiwala joins in with the details.
Reports suggest that Reliance Retail is in advanced talks with US private equity firm Silver Lake to sell around 1.7% to 1.8% stake for a value of around 7,500 crore rupees. So, this will be very interesting to see, what is this deal, and actually does this deal go through and materialize? We have seen some similar things done by, on the Jio platform by Reliance and by Mukesh Ambani. Will that be something that we'll be watching out for Reliance Retail as well? Is going to be very interesting to watch out for. Now, according to this, if the deal materializes, the potential value of Reliance Retail will be over 4.1 lakh crore rupees. So that will be very, very interesting and very good value that will add to Reliance Retail. And according to this report, it suggests that Mukesh Ambani is looking to sell minority stake in Reliance Retail, and he's in talks with many other investors as well. Now, according to the report, it suggests that the investors in Jio platform have been given the opportunity first to invest in Reliance Retail. So, this will be very interesting to see which of the investors of Jio platform actually come out and actually invest in Reliance Retail as well. Who are the other investors also? Because according to the reports, there are going to be other investors that Mr. Mukesh Ambani is in talks with as well. So, it will be very, very interesting to see how this actually pans out. And, as per the reports, it suggests that when they tried contacting the Reliance Retail spokesperson, the company said they did not, wish to comment on any media speculation, but they are always evaluating opportunities on an ongoing basis. So that is going to be very, very interesting to see, what actually goes through for Reliance Retail. Is there like a raising what we saw on Jio platform coming in for Reliance Retail as well? And we'll keep a close eye on the Reliance Retail platform, and what are the actual investors coming in for Reliance Retail as well.
Okay, thank you, Vinny, for that. We'll do one thing. We'll take a very short break right here on the show. Lots more interesting conversations lined up when we return. Welcome back. You're watching the newsroom on ET Now. Zerodha, the country's largest retail brokerage, is averaging 2 lakh plus account additions since the lockdown, as many millennials take to investing in the market for the first time. Zerodha founder and CEO Nitin Kamath spoke to Chandra Shrikant on what makes Bengaluru and Pune, two of his core markets. Zerodha, remembers, bootstrapped, profitable, and was adjudged Startup of the Year at this year's ET Startup Awards.
Surprisingly, it's continued. So we've been adding more than 200,000 new customers every month. I think April was the largest, but this month again, we've done more than 200,000. So as in the month of August, yeah, and the market is tempered now, right? As in it stopped running up as much as it did in June, July. So surprising that even now there is so much interest for doing this. But pleasantly surprised.
Yeah. I mean, why should you complain about it? But in terms of the top cities, I noticed that Pune is the most active, and 40% of it comes from your other top metros such as Bengaluru, Chennai. I'm interested about the Bangalore market in particular. How active are people here? A lot of technology workers, technology employees working remotely across all these tech companies, domestic multinationals. Has that led to renewed interest?
No. I mean, I think Bangalore, Pune, Hyderabad, right? Are like our target audience because the customers, our age group, the average age of our customer is less than 30 today, and these are typically people who have started the jobs and they've started saving, and they're now thinking about what's the best way to save, invest, right? And this audience care for product experience, for for education initiatives. I think one of the heartening things about this generation of people investing in the market is that they don't really rely on tips as much as the previous generation did. I mean, if you were to ask me, I've been in the markets for the last 25 years, and I can see that shift in the behavior of users, which is instead of just taking a stock tip from someone, today people want to know why are we buying this, right? As in and there's a little more interest in that. So that audience for us is in these three cities. Bangalore is where we've I've been brought up here, and we started our business here, and so Bangalore is probably one of the has the best audience. Now, why is Pune a little higher than Bangalore? I still that's another surprising thing for us. Like always when I look at it, Pune is always a little higher than Bangalore for us, and. Yeah, but one of the issues with this, with this data point is that, right, as in a lot of times customers have their address belonging to some city, but they actually move around.
And when you say the audience in Bangalore is very different, do you mean they are more discerning, that perhaps they will do more research, or are they more discerning in the kind of companies they invest in? Do they show perhaps more bias towards new age technology companies? How are those patterns different?
Yeah. No, I mean, like, it's one, firstly, they appreciate product experience a lot more. Like, if you were to compare a Bangalore audience to say a Bombay or a Delhi audience, right? It's the behaviors are slightly different. The Bangalore audience, what we've seen is cares a lot more about product experience. The generation, that probably is also because Bangalore has a lower average age of sorts. Historically, I think stock market has to fight gold and real estate, right? And gold and real estate have been favorites of Indians for a long time. And what we've seen surprisingly in the last few months has been that even though gold prices have shot up, people are not really going out and buying gold jewelry. And we've seen a surge in activity, of people buying gold ETFs and people investing into sovereign gold bonds. And probably sovereign gold bonds is like one of the best ways to invest into gold today, because you get that 2.5% over and above whatever gold returns you. Right. So there's been a surge in activity around gold in electronic form.
Nitin, I think this year marks your 10th anniversary, if I'm not mistaken, and you're still bootstrapped, profitable, a complete misfit, so to speak, when you look at the heady valuations that people go after and unicorn status and all that. So what is your goal going to be? What other areas are you bullish on? I mean, the country's largest retail brokerage, but apart from that, you've also shown interest in
other platforms that you are developing. So what's going to be your focus over the next?
I mean, see, the thing is, we enjoy what we're doing right now, which is stock markets. So this is our core competency, and this is an industry that we understand well. So whatever we do will probably be ancillary to this. One of the things that we are currently live with as a beta has been loan against securities.
All right. Well, as we celebrate Teachers' Day, perhaps a day in advance, we spoke to Vishal Khandelwal of Safal Niveshak, who shared his investing lessons to help you build wealth. Here's a slice of that conversation.
The first thing which I talk to students or people who want to learn about investing or developing the right mindset is to first know themselves, whether they are attuned to long-term investing, whether they're fine investing for the long term, where they're comfortable letting them compound over a long period of time.
Right. So what are your go-to investing principles? I mean, there are some lessons I'm sure that you really swear by. If you could talk to us about some top 3 or top 4 of your favorites or your go-to lessons.
Well, I think the very first lesson definitely is to survive. I think if someone wants to really do well in long-term investing, he or she first needs to know how to survive that long-term, right? So, like Buffett said, never lose money is the only rule of investing. So, I think knowing what you should not be doing as an investor is one lesson which I've taken to heart and I practiced for years now. That's one of the most important lessons that I practice and I can teach to anyone. The second is definitely about the power of compounding, the power of long-term compounding, which comes along with patience. So having the right kind of patience to deal with the markets ups and downs over a long period of time, sticking with good quality businesses over a long period of time, and ignoring the short-term volatility. So these couple of principles, and of course, the most important principle that is of.
Okay, well, on that note, we'll wrap it up on the show. Thanks for watching.